Now, understanding how to read a balance sheet is quite important. Even the world's most successful investor, Warren Buffett, he says that till you actually understand how to read financial statement or learn how to interpret them, till then you should not invest in stocks or any other business. Now, in today's generation, people understand that you can't grow your money by just keeping in your bank account. With an average inflation of 6% happening, it's really hard to keep the money just in the bank account and trying to get returns. So everyone wants to invest it somewhere, whether it's in some business or stocks or pretty much anything which can actually give quite a good return. One of my friends, he actually invested a certain amount of money and bought a small percentage of shares in a local restaurant. Now, being very honest, he pretty much got cheated because before he invested, the owner told him quite a good story of how the outlet has been operating, how it has been functioning. He invested thinking that the restaurant is doing quite well, but in reality, they were pretty much in losses. They had decent sales coming in, but the overheads were very expensive. They weren't able to actually make much profit, and the main owner was actually pouring in money from his own pocket. And not just that, it seems that even the manager of the outlet was actually taking a small part. Now, this guy, he never actually bothered to check the balance sheet or the income statement before actually making that investment. If he would have done that, he would not have got into this mess itself. So don't make that mistake. Just because you want to invest your money somewhere doesn't mean that you throw your money. You work pretty much hard for it, right? So don't just waste it. Now, any business or a company declares its financial statement on a quarterly basis. And once a financial year is over, the company makes an annual report. Now, every quarter basically means 3 months. Now, if you're talking about India, the financial year starts from 1st of April and ends on 31st of March. So, balance sheets are very, very important. Whether you are a business owner or you're planning to start a business, you need to know how to make a balance sheet for your own business. Or whether you want to invest in stocks with a long term horizon or you want to invest somewhere else, you need to understand how to read a balance sheet. Now, if you do get some value out of this particular video, it would be great if you can hit the like button and subscribe as well, as it just motivates me to create more content for you guys. Now, a balance sheet has two aspects: assets and liabilities. Now, whatever a company owns, that's the asset, and whatever loan which a company has, that's the liability. Now, the reason it's called a balance sheet is because what it does is it gives you a value of all the assets in a company. You add all those up, and then you take the total amount which you owe, which is basically liability, and then you put the difference, which would be total equity which you actually have. Now, for example, if a company has its own plot, its own office, its own cars, all these are the assets of a company. Doesn't matter if you owe money on this. Whatever it's worth, you add it to the assets of the balance sheet. Even if the amount which the company has in its bank account, or let's say has invested in some product, all these would be considered as asset itself. But at the same time, if the company has taken a certain amount of loan for building the office, that's a liability. If you have added the building on the assets, but the remaining or the pending loan which you have to pay to the bank, you have to add that to the liability section. Even the cars which the company owns, if there is still an EMI to be paid off, then that would be considered as a liability as well. So anything which the company has borrowed or yet to be paid back to the bank, that's a liability for the company. So let's say you have about 1000 rupees on your balance sheet as assets and you got about 700 rupees as liability. Balance left when you subtract both, that's about 300 rupees, that's the equity which you actually have. So basically, your assets need to balance with the liabilities plus the equity. This is the most fundamental thing. Now, obviously, if you got more assets than liabilities, what I mean is if you own more stuff than actually owing money for those things, then that's a positive thing. The most basic thing which you need to look at a balance sheet is that the equity on the balance sheet should ideally grow year on year. Now, that is super important, as what this means is you are in a business which has less liabilities and you have more money going down into the equity section. If a company has more liabilities than assets, then you need to be careful. A lot of business, they make money, they have good sales, they have good profit, but the profits never actually come into the equity section of the balance sheet because these companies, they reinvest into their own business to ensure that their business grows year on year. So, along with equity, you also need to look at the working capital on the balance sheet. Working capital is quite simple. You take the current assets, which can be turned into cash this year, like your cash in your bank account or the certain investments which are giving you a periodic return, and you subtract what you're going to pay off this year, which includes your loans, your EMI, everything. And what you want to see is that the current assets minus current liability is a positive working capital. If this working capital for this year is negative, then that's an issue. On the balance sheet, you can basically track what's moving where. Do they have more cash coming in or do they have more cash going out over the years? All balance sheet for every single business is always audited. This is just an overview of the balance sheet. I will be making a complete video on how to read a balance sheet step by step as well. For example, on money control websites, if you're looking to invest onto stocks of a particular company. So with that said, you guys, thank you for watching this video. I really hope you guys have understood the basics of a balance sheet. If you did take away a few points from this video, I would really appreciate if you smash the like button and subscribe as well. Also, if there's any particular questions regarding this topic, feel free to comment them below or just drop me a message on my Instagram or LinkedIn and I'll try to get back to you as soon as possible. So with that said, see you all in the next video.